at a time. It is January 29th. More specifically, it is Saturday, January 29th. And yes, we still do the daily financial news on Saturdays. In addition to the financial news, we will be doing a live Q&A at 8 a.m., so in about 29 minutes or so. Feel free to join me there. Two topics that I am bringing to the show today is one, some truth, some reality, some metrics around self-made millionaires and why you should feel good about your chances. And then second, we are going to talk about Blackstone, but more importantly, why you getting to at least 4 rental properties could put you on the way to copying Blackstone. And if you don't know who Blackstone is, check them out. They are a decent sized hedge fund, but really what they are known for are being the best real estate investors across the country. They've been in office in retail forever, but they are making huge plays in single family, and you can copy what Blackstone is doing. So those are the two topics that I will be bringing to the live Q&A. After that, it is up to you. Ask any and all questions. We will do the best that I can to answer them. We go for an hour. Then at 9 a.m., I will switch over to my private Facebook group just for my students, where we will spend a half hour together. And then at 9:30, I have a extra special guest that I'll be interviewing for content later in the day. So very busy day for me. Every day is Saturday, and that means that I need to give you 2 hours of original content. So let's get going. When I look at the daily financial news today, there's lots of stuff here. Not warm and fuzzies, but they are reality. These are things that we need to understand because we are all making money decisions together. First and foremost, I've talked about this yesterday, I think, or the day before, when we talked about the fallen angels, Netflix, Peloton, and most recently, Robinhood. Robinhood specifically, I said it yesterday, at some point, somebody's just going to gobble them up. And this is what happened in the dot-com era. A lot of people talk about the dot-com crash. A lot of companies did go broke, bust out. But what you may not know, may not realize unless you lived through it, a lot of companies were acquired. Some to get rid of competition, some to acquire technology or apps. It's just the law of the jungle. And yes, folks, having been a part of these, that does and will eventually mean right sizing, layoffs, all of those things. Bear markets are not fun. We have exited a bull market, entering a bear market. I know we don't want to believe it, but that is just where we are. It is part of the system. It is not fun, but if you understand it, you're ready for it, it is a great time to make some money. Lots of people out there, just the average person not watching one rental at a time, they're spending too much money. They are living a payment lifestyle that is going to bust them out. It is going to be painful for the masses. So understand your freedom number, needs versus wants. All of these things we talk about on this channel, never more important. Do the work. So again, some fun times. And yes, folks, if you're asking, this is a sports jacket. I figured I got them in the closet. I might as well wear them. I did give away over half of them, but I kept a few. So you may see sport coats instead of my Warriors jacket sometimes, but I don't know. It was fun. It was a fun morning. Anyways, so a couple of things. Remember, there will be companies that crash and then get bought out. So I think Robinhood very likely could be one of those in the near future. Not investing advice, just realities of where we are. Fallen angels, some die, some get acquired. Next up, just-in-time inventory. It has, excuse me, it has given way to a buy everything strategy. If you are a procurement manager, you are no longer spacing out your acquisitions. You are buying, you are double buying, you are triple buying. Wow, dry throat. This is why I'm telling you that now the Q4 GDP number, which appeared to be outstanding, I think it was 6.9% from memory, 4.9%, or about 75% of that number is what I call empty calories. It is not to be repeated and unfortunately will be a drag on Q1. It is Q1. Nobody wants to hear this. It could be a negative number, negative GDP. The consumer is tapped out. We talked about that already. Holiday season, all of that nonsense. Now we have Q4 4.9% of a 6.9 is inventory build. Talk about not repeatable. That will not happen again. Yeah, not good. On top of that, December, folks, December, all of these things I told you were coming. Q4 was going to be good. December was going to be weak. December is weak. U.S. consumer spending down, negative 0.6%. Think about what I just said. Think about what I just said. The consumer, in the holiday of all holiday seasons, spent negative 6%. They were down. The consumer is tapped out. Now, some of that, granted, they spent early, blah, blah. We talked about it already. That's why Q4 was good. Q1 will most certainly be negative in real terms. Frankly, Q4 was negative in real terms. It could be negative in nominal terms, which should freak people out. We have had many conversations the last 7 days about nominal versus real. Go back and watch those. Another point about bear markets. Again, I think we are in one. I think it rolled over. It's not fun, but reality. I think a lot of you out there have experienced a bear market. You can actually look at just March 2020. It was fast, it was sudden, and it was a V-shaped recovery. That is not normal. That is not normal. Some of you thinking it, hey, I'll just hold 3, 4, 6, 8, 10 weeks. It'll bounce right back to the peaks. It doesn't have to be that way. For example, my fear is we are going to repeat the sins of the 70s. I've talked about that endlessly. There was a bear market in 73 and 74 where things fell 45%. That was the averages. There were something, again, Google is your friend. I know lots of you won't do it, so I do it for you. For example, have you ever heard of a company called Coca-Cola? I joke. It's the most recognizable brand out there. But Coca-Cola went from a peak of $149.75, $149.75 a share at the beginning of the bear market to a trough of $44.50. That's a 70% whack for one of the largest companies. And oh, by the way, a company that is still around today. How about Avon products? You don't know Avon products? Neither do I. What you should know is they were a hot growth stock in 1972. This hot growth stock went from $140 a share to $18.50 a share. This is being repeated right now in companies not called Avon products. It's just the latest. Companies that were selling visions of fast revenue growth but with no profit. Welcome to the 80% drop. Go back and watch conversations about opportunity cost, diamond hands, all of that nonsense really can be detrimental. 1974, growth funds. 313 out of 318 growth funds lost money. Bear markets are not fun. 123 of the 318 fell by more than 30% in a year. These are just the facts. You can go Google these all you'd like. Lessons from a trader. This article was written, I think, in 1988 or 89. It was referencing trading in 73 and 74. His response were, rein in risk. Don't buy volatile growth funds or stocks. Don't panic. Understand if you are an investor, a trader, or a speculator. I think he actually said gambler. I turned it into speculator. But again, these are things that we talk about on this channel a lot. Don't call yourself an investor and be a trader. Don't call yourself an investor and be a speculator. If you want to be a speculator, it is a free country. Do what you want. Just don't be confused. Something else we saw in the December data that is now coming out is the employment cost index is up by a record 4% in December alone. Folks, wage inflation, just like the 1970s, it is here, it is real. Go get yours. Employees have more power today than the 35 years or so that I was an employee. Go get it. It is time. And unfortunately, for most of you, that means you will have to change employers. It's just how it works. 50% basis point bump seems to be increasing with every metric, every variable. The employment cost index is something that Jerome Powell has historically looked at, and he cannot feel good about a 4% bump. Again, my call for 50 basis points is months in the making. It has gone from a outlier 1 in 20 now to a 1 in 4, and I still feel good about that call. One of the most scary metrics I have seen in recent times is the following, and it's because I follow the consumer. Consumer expectations. This is something I learned way, way back when I was studying economics. Inflation only becomes a real problem when consumer expectations change. And right now, consumers expect inflation this year to be almost 5%, 4.9% to be specific. That is not good. That changes behavior. There are consumers making decisions today because they anticipate higher prices later. Inflation is becoming ingrained. That is not good. I saw an article today or this morning that kind of freaked me out a little bit. Don't know if you saw this, but apparently we are sending 8,500 troops, military personnel, to Eastern Europe. Now, you could look at this and think this is just precautionary. They'll come, nothing will happen, which I certainly hope. But does it make me feel all warm and fuzzy inside? If you have served, are serving, will serve, thank you very much for your service. If you know my story, both my parents served in the Vietnam era in the 70s, so thank you very much. Again, what did we talk about Stan Druckenmiller yesterday, the day before? Bear markets are hit by two things: rising rates, hello, Jerome Powell, and the onset of war. Yuck. Yuck, yuck, yuck. Yuck. So in the end, folks, that's what I got for your daily financial news. Get ready for our 8 a.m. live Q&A. Again, I will be talking about some self-made millionaire stats and facts. These come from a Fidelity survey. I will be talking about Blackstone, what they are doing, but more importantly, how you can copy what Blackstone is doing. It is what we talk about at One Rental at a Time all the time. So again, hope you enjoy that. It's going to be a fun hour together. I hope to see you there. Have fun. Remember, like, share, comment, subscribe. We are trying to help 1 million people. I need your help. Please subscribe. I always forget to say that. Leave comments. Send me articles. Just have an awesome, awesome day. Take care, everyone. Bye-bye.